Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 15th. Mike Boutros with you on the horn. Agnes, Steve, Zihad, everyone in the room, good morning. Interesting start to the week. Didn't put out an update yesterday. A lot of these trades are kind of still in a holding pattern, although we have seen some stretches in some of the dollar moves. So on the menu for today, DXY, Euro, Aussie, gold, sterling, dollar CAD, dollar yen, SPX is huge. The levels have been outstanding. And then I do want to take a moment to look at oil, which has a possible exhaustion point here as well, and Bitcoin. Any other questions or trade setups? If you didn't hear or mentioned, feel free to throw them on the message board at any time. So from an event risk standpoint, guys, we just cleared out all the event risk for the day, essentially. UK data came in slightly better than expected. Employment change only contracted by 38,000 versus expected 65. Unemployment holding 4.1. GDP figures in Europe have been right in line with expectations. The real fun stuff starts tomorrow. You got core inflation out of the UK, core inflation out of Canada, retail sales out of the US, FOMC minutes, which typically don't charge all that much volatility. As we've heard Bullard on CNBC and on some of the wires yesterday, really asserting the point that they could do 50 basis point hikes and that they're behind the ball on inflation. You know, we're getting some of that mixed messaging. So definitely, maybe, I don't want to say definitely, but maybe the minutes may actually spark some volatility this time tomorrow. So keep an eye on that at 2 o'clock. But let's jump right in. Here's what the DXY looked like into the close of last week, right? We had just come off of a big support zone, which was that 95.15 level right there, the October 2017 low. You can see it there on the daily chart as well, converged very nicely, right? 95.16, excuse me, with the low day close for this year and a 786 retracement. So on the scalp, we were basically coming into uptrend support, right? We were looking for a break of the weekly open range. Ideal scenario, you see that move back towards the median line, and then that's another exhaustion point. You start to look for possible dollar turn. Here's what it looks like now. It's been textbook, right? We went over this yesterday in the webinar. The only thing I've teed off is that we didn't quite make it into that 96.50, 96.56 level, which was the 618, the 2021 objective yearly open and the median line. So we did get the rebound, moved higher. We're failing right ahead of the median line. Where does this leave us in the broader picture, right? We have US retail sales on tap tomorrow, and again, some of those Fed minutes, we'll see if that does anything. But the base case scenario, again, by my part, from what the technicals are suggesting, is that the risk is for topside exhaustion. So you're heading into the mid part of the week looking for a near-term high below 96.50s, ideally. The weekly opening range has just been set, so we stretched into a high. Here's Tuesday trade. If we hold that low into the open of US trade today, again, especially into the close, then you got a really nice opening range right below resistance. If you get the downside move, you're looking for 95.70, you're looking for the lower parallel, 95.30s max, like here. Okay, remember our bullish inval was 95.16. Just ahead of that now, you get that problematic slope. So if you take another interesting tidbit, if you take a retracement of this near-term advance, look where the 618 comes in. Right into 95.70, 95.65, same zone. So any way you slice it, ideal scenario is that we get a little bit of a pullback in the dollar, looking for reaction off one of these two zones. Remember, the technical damage that was done with that reversal late last month into the open of this month was pretty severe. This was a major breakout, fresh multi-month highs, multi-year highs, failure, and then almost a test of the yearly opening or the yearly low day close. So this is certainly a very weak, sort of resumptive almost move, you'd think. definitely a huge red flag, right? So the ideal scenario again was that rebound to get it into this zone. Monthly open comes in 96.70s max, and then pull back. The market might not have it. Okay, if we end up the day again really positing back below the weekly opening range, you're looking for 95.65, 95.70, and again 95.30s. Eman, hello, Mike. Hope you and your family, especially your daughter, are perfect health. Thanks, Eman. All is well. Yeah, she's on the mend. She's back in school. God bless America. Thank you for asking, Eman. So that's DXY in a nutshell, guys. Basically, this could be the near-term exhaustion high that we're looking for. That's going to be kind of confirmed at the break of the weekly opening range if you get it. But the dollar weakness is sort of the story we're looking at. A quick reminder of the weekly chart, guys. Again, big exhaustion there. Here was the ideal choke point. If we don't get this and the move resumes lower, 95.15. Again, right ahead of that, slope, 95.30. Questions on DXY? Keep your eyes on those retail sales figures. Supposed to get a print of 4.8%, which is exactly what we got. Excuse me, retail sales. We're supposed to get a clip, of 2%, which is exactly what we got in the negative side in the other on last month. We got negative 1.9. So for the month of January, looking for a nice bump there. Could be a major or could be a volatility pop there. All right, next up, euro. Here was our update on where we were on euro. So similar scenario, exact inversion of the DXY trade. We came into big resistance. This actually did clip big resistance, and we were looking for the pullback. The play last week, and again, that we talked about was the move into 113.50. That was like the move I was involved in. We've now broken below this and turned right ahead of that 618 back into this as resistance. Do we get resistance back at the median line? I'm eventually looking for the break higher, but here's what it looks like now. Okay, and there's the side by side. So there was the break right into that 38.2. Did see a nice little pivot there. We actually closed the week right below it. Here's the start of this week, move lower, and here we are again, right back at the weekly open. If we break above the yearly open, back above 1383 right here, then you're looking for the resumptive path. So looking for guidance here, heading into near-term resistance on this immediate stretch for euro. Again, don't forget euro where we're coming from on the weekly charts either. Big breakout, multi-month downtrend resistance. This is like your perfect quintessential basic break of former resistance, check as support, and move right off. So it's absolutely critical, again, that euro losses do not exceed 12.64. That's the kind of the level that we've been talking about since the start of the week. That's the 618 down here. Here's the daily chart. Even a near-term objective low, high, low. There's the 25% parallel. Max loss. We make it back above the median line. Again, you're not out of the woods yet on the upside. You still need to get through this. So let me take a step back. There's so much loaded up at 15. It's not even funny. You've got the January high for this year at 1480. You've got the 2019 high day close at 115. Okay, this has been a major pivot in price. Break, accelerated drop, turned right ahead of it, turned right ahead of it, almost went for a stab right into it. This is your key range. That's your breakout zone. Targets on the breakout are 1570 and 1590, but that's going to be a break of what? Your objective yearly opening range. Not Mike Boutros' opinion, not Jamie's opinion, fact. So try to stay as objective as possible. There's a lot of stuff on the way up. Again, 1450 is going to be a 2019 open. Seen a decent pivot there, but that's really the big whopper. So euro looking constructive above 1264, 1260, let's call it. Need to pop above 115 to really validate a larger breakout. And really sort of the whole scenario would take us out of this longer term pitchfork we've been following off of last year's high, right? High, low, high, little 1 degree off there. Here's the median line resistance. So whatever interpretation you look at, euro is really under the gun to validate a larger breakout here. Any questions on euro? Like I said, GDP figures came out right in line. This was a second read today, so no big deal here. No major event risk on tap out of Europe or the Eurozone from a technical or from an economic data standpoint. Obviously, everyone's looking at the ebb and flow of the tensions with the Ukraine border. You heard today that there was some easing, some troops have scaled back. Looks like there is some positive commentary coming out from officials talking, but that's going to be an X factor. You can't plan trades around that, guys. You can't try to fix a specific setup on that. We just have to kind of be mindful of that happening in the background. Any questions on euro? I'm short at 1877. Appreciate your update if we can. For gold, well, I was going to do Aussie first, but let's go ahead and do gold, and then we'll come back and do Aussie. How about that? Here is gold. Yeah, it's a pretty critical juncture. Man, I can't believe how you keep slamming these trades. Nice and well done. Just playing the levels, right? Straight up, 1877 was the level that we were looking at. That was 100% extension and the exact high that we ran into back here in November. And we talked about yesterday how this could be, a decent exhaustion trade near term. On the longer term prospects, this kind of needs to catch support soon, right? Thanks to you, because I'm sitting on fire for your gold update. Cheers, man. So listen, the breakout materialized last week with a weekly close above multi-month, basically the entire 2021 trendline resistance. We even checked it again and posted an outside weekly reversal in January. This was the first break and a legitimate close above that slope, right? So if this pullback is just a test of former slope resistance as support, we should be looking for support not too much lower from where we are now, but don't want to see anything sub like 1830s, 1840s. This is from 1,000 feet up on the weekly chart, right? Daily chart looks like this. As it stands right now, the threat, if we were to close at these levels, obviously US markets haven't even opened yet, but it's the outside day reversal candle. Typically, again, a bearish type of development. Here was our last outside day reversal candle that was of merit. Here was, had a couple, I can't remember where the last one was. But we can go back and look a million times. Here's another outside day reversal, right? So the exhaustion trade from a price action standpoint is there. What about from a level standpoint? Well, we've been talking about this. This is the pitchfork we were following from last year's low, right? Here's the 25% parallel, which caught last month's high. Here's a sliding parallel, almost the same exact slope, only that's the 2019 trend line. It's the same one, guys. It's always been there, right? 1, 2, 3, confirmed. And then it's been a decent pivot in price on both sides. When you break, accelerated break to the downside, resistance, 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 accelerated break to the upside, accelerated break to the downside. Was that resistance again? And that was the whole call of why we thought it looks a little tired. It's just been a straight slingshot off last month's low. Every corrective move has been no longer than 1 day. And momentum's coming into a ceiling here. Didn't have any confirmation of this yesterday, but the stages, right? The technical flags were all there for some sort of exhaustive trade. Now, I didn't think it was gonna be quite this severe, quite this quick, but here's how it happened on the intraday chart. Remember this yesterday in the webinar, I added this slope, real near term, right? I don't wanna get married to it, but here's the break again, and here's the breakdown again. And this break is what has a little bit more meaning to me, guys. Right here. that we broke back below it, and when you did, it accelerated even lower. So for intents and purposes, to keep this a little clean, here's what it looks like. A basic 38.2 of that same advance, right, off the highs gives you 1840. Look where that slope is, by the way, right? Remove that. It's the same downslope that we were looking at. Remember that red downslope? Resistance, resistance, resistance needs to hold support. So while this looks like a break of the weekly opening range, again, it's only Tuesday, so I wouldn't actually call that a break of the weekly opening range. But for all intents and purposes, the range lows for the week. And we are coming off of a big uptrend resistance. The threat, you'd think, would be for a larger pullback. But again, on a weekly standpoint, I don't want to see a close below like 1835, let's call it. If we close back below 1835, 1840, it's actually pretty problematic that this could be a false break scenario. It's not the most convincing divergence yet, but and then you'd start to fall apart. You'd start to think about the risk of this thing just completely washing out. A false break, if you will, of the consolidation pattern we've been in for over a year. So this is actually pretty important stuff here, E-Man, for gold. Watch this closely. Again, 1840s, 1835s. I want to see a reaction there. If it buckles back below intra-week, fine. Maybe you see a check of the 618 to 1818. But at the end of the week, we're closed below this. Big problems. Big problems for gold. Does that make sense? Near-term resistance at this point, I'd be looking at the weekly open at 1858. And then nothing really changes on the long side, guys, if this breaks out. I'd still be looking for 1877, but we're looking for like 1898, basically 1900 and beyond. So pretty critical for gold, definitely over the next, I want to say like 3 weeks. Will be absolutely important to see how this massive trend either gets out, the breakout, and we're off to the races, or this is one big massive exhaustion blow off, last kind of oomph before a larger correction to the downside. Yes, Michael, as always, helps beyond. Thank you. You're more than welcome, man. Cheers. It's always good to see you in the room. All right, that is gold. I'm going to backtrack 1 sec, and number 4, here's Aussie. So from that same update, so no change to any of the gold levels, by the way. We held that. We're basically ramming off that 100% extension. We're pushing back. So here are the updated targets. If you guys, yeah, I see. You can take you can take a snapshot right there. Here's the side by side. Okay, so for Aussie, it was that same update. Here's what we were looking at right into the close of last week. It turned, again, a very frustrating trade. The same thing that we were looking at on that euro thing. It turned right ahead of that 100% extension, like 72.60s. I would have loved to see it. It was 72.52 into 72.70. That ended up being the high, right? So here's Aussie. Let me show you first on the weekly chart of what we were talking about. Big support. The whole focus of this thing, the last 3 weeks, has been what we do off that 2020 objective open, the November low from last year. You had some lows here in 2020 to even mention those, some highs here on the inflection. Huge range. Some lows here is the 2018 actual swing and close lows. We could go all day. We dropped into it for the last 3 weeks. Again, we've been working on this recovery. Would have loved to see it tap at least of the yearly open before we start to make any like kind of pullbacks. We failed last week, right ahead of it. Okay, the high registered at 72.48. We were looking for 72.70. So what do we do right now is the question. I just wanted to show you from the weekly standpoint, guys, there's not much to do here. You're either long and you're waiting for the recovery to get that higher stretch, or you're pretty much flat. So not much positioning can be taken from an aggressive standpoint from these levels. Now, I am looking for the stretch higher, right? But the setback hasn't given us the full stretch there either. This is really messy. I'm going to go ahead and drop this to slope just for, I'll show you the intraday chart in a moment, but objective stuff here, right? Here's the yearly open. Beautiful break last month of the monthly opening range, closed pretty darn close to the lows. Here's this month's open. You test the monthly open again. Here's the drive higher, and that 618 at 7180 actually held on a closed basis, right? Right into that region, pulled back. So once again, for me, after this, we're looking for the pullback. We're just looking to play a little bit of a corrective move, a stance off of this stretch, 38.2, 618 max, right, to get the recovery. Turned right ahead of what we were looking for. And yet again, we're still below 7180 resistance. So that's the 618 of the yearly range this far. Again, like, I'd love to be long. I know we're long on the swing side of things. Got to get through 7180. Here's what it looks like on the intraday. So you can see, adjusted the slope for that high. That was the high. So opened up the bottom a little bit, but we dropped right into it and closed the week just ahead of slope support. So what the heck is this? Is this a break of the channel? I don't know. All I do know is that it's a pretty decent weekly opening range setup. If you get a break higher, again, 7180, stop traffic, is the 618 of the drop here too, 7186. So I like go stretching to 7180, but still that's going to be my near-term breakout zone. If we get that, I think you get a 100 pip, 90 pip move to the upside, but that's going to be sort of the level that we have to clear so we don't get something else like this, right? Got to clear on a closed basis to validate the resumptive move higher. So tricky waters here for Aussie. Watch the weekly opening range break. Again, if we break lower, the 618, last week's open, I mean, not that that's important anymore, but the 618 comes in at 70.70. So neutral on Aussie from the scalp standpoint. I favor the top side with an objective break of the weekly opening range, but need to see some pickup here, at least in momentum. Some of these trades completely flatline. Like Sterling, we'll go over that next. Thing is just range, range, range. Of course, you have UK inflation figures tomorrow, but any questions here on Aussie? Okay. You do have Aussie employment on tap tomorrow, so do keep that in mind. All right. Moving right along. Here's Sterling. There's not much to update. If you guys were in the webinar yesterday, we're still right in that godforsaken range. So we've covered the gold updates. Here's Sterling. Nothing really to update. Here's what we look like right into the open of the week. The yearly open has still been not so much necessarily a support resistance level, but it's been a very decent straddle, a pivot point, if you will, right? Support, bam, resistance, magnetized. Now we just broke back below it, sat there as resistance, broke back above it, sat there as support. So look, the weekly opening range is setting up right around that yearly opening. We've continued to straddle this thing. On whole, here's what Sterling looks like from the weekly. Again, showed you this yesterday, but we're unchanged for the year essentially. Figures to write down if you're someone who's looking for the larger trade in Sterling. It's either a move above 36.76 for the breakout and the larger resumption of the uptrend. That's the high week close, trend resistance. On the downside, it's the 618 of the range from last November, December lows. That's 133.91. Everything in between's been noise. Here's what the daily chart looks like for pound. Looking to try to get a fix on the slope. 34.67 comes into mind as an important level, again, right above this month's open. So nice zone there. And on the long side, you know, 36.74, 37, that whole area is littered with former swing lows, yearly opens. The 786 of this drop is in there as well. I took it off just to clean the chart up a little bit. You got slope resistance in there still, that's still active, right? 1, 2, third touch confirmed, that converges there. So the sterling trade for me is it's not even a discussion really. It's just so sloppy. I've been not interested. Range trade conditions, if you're a range trader, you love this world because there's plenty of opportunity. But for trade, larger swing trades, it just hasn't been my cup of tea. So here's the levels look like again, for what it's worth. No change to any of that any levels from the update back on the 13th. May get some play tomorrow. Core inflation is expected to print at 4.3%. That's an uptick from the previous read. Headline at 5.4. That's supposed to hold from the previous read. So they're not supposed to be seeing quite the large pop we've seen here just yet. But again, between us, I do think it's gonna get to them eventually. The inflationary picture here in the US is it's not likely to get so much higher per se, as much as it's likely to be lasting, meaning really sticky. So you might not get 9% inflation, but you might sit at 4 or 5% for a couple of years. That's extremely painful for the economy. So we'll see how that pans out. In any event, next up on tap is dollar CAD. Also another inflation print on tap there. Loonie inflation is the one that's supposed to go up 4.8%. That's no change either. But core last month was 4%. Here's what dollar CAD looks like now, and here's what it looked like in our last update. It's the crunch. It's similar to sterling in that it really hasn't done anything yet this month. That said, I do prefer this one because the levels just seem all the more cleaner. Here's what dollar CAD looks like first on the weekly charts, right? We're just coming off of a bounce off of uptrend support from this pitchfork we've been following from last year. So that bounce from uptrend support failed at a major pivot in price. Last year's high week close, the 618 of the drop from last year's high. Should be no surprise that we're getting a couple of weeks of, struggle to get through that key zone. Once we do though, I think you get 2960s, 2970s pretty quick. Until that happens, you're still below resistance. So what do? Still think the risk is for a pullback from that play. Here's what it looks like on the daily charts. The thing that I like about Aussie, or dollar CAD rather, is that the monthly, opening range is exceptionally clean here. Here's our monthly open. You set a high, you test a low, you test the high, it fails. You try it to break the low, it fails. You close massive. That was an outside reversal candle to the upside off of the yearly open. That failed again at Fibonacci resistance, at last month's late swing high, at this month's opening range highs. So all things held constant, we're still in this corkscrew, okay? Typically, these can be resumptive patterns. So I know that we're holding shorts there again on the swing side of things, but if this breaks this upside, likely to be an accelerated advance. The ideal play we were looking for was a bounce, pull back from resistance, maybe a check of the 618, maybe a check of former slope resistance as support all the way down here. But at the end of the day, respective break of the monthly opening range. Here's what it looks like on the intraday charts. Here's the 2-hour. You can see a nice series of lower highs. Not so much per se higher lows. You got that outlier right there. But nonetheless, even if that was still flat, that's still a consolidation. That's your breakout. Then you're looking for 2813, 2850. If this falters, we need the buckle below the objective yearly open. Has been a very nice pivot. That's 2640. If we break back below that, I think you get the accelerated slingshot lower, right? 2580, 2520s is perfect where we're on slope. Slope comes in at 25. I think the limit's at 2520 that we have for the swing trade. So watch for the consolidation break. watch for the consolidation break. If you're positioned on the swing side, don't touch things. Play the levels as Jamie puts them. If you're looking for stuff on the intraday and you haven't played that, we're still looking for clarity on this. Any shorts you take need to be against that weekly high. Break below 2640 is what's required. Anything above the weekly range highs risks the resumptive trade. Loonie inflation on tap tomorrow morning, 8:30. Questions on dollar CAD? All right. I started writing about dollar yen earlier in the month. I didn't think we were going to get such quite the price action that we've been getting. Look, all I wanted to do is kind of highlight this 116.12 zone. It's absolutely critical. It's a level we've been watching. It's the August 2015 swing low, if you want to go back in price action and find that level. But it defined essentially the rally that we got right into the open of the year. That's where we faltered, pulled back, found support at the uptrend. Once we buckled back above the median line, we failed there again. Now, this actually ends up being a major level. I'm gonna go all the way back to the weekly charts here as well. I've kind of reworked these. I published this chart yesterday on Daily FX. Reworked the levels for a little bit. Spent some good time loving on this one. So look, the objective yearly open comes in at 115. That's weekly support. We've already seen a reaction there. Beyond that, soft support at 1455, but this is your broader bullish inval. Guess what? It's the objective yearly range lows. So that's clean, right? Converges on slope, very well defined. A breach above 16, specifically 1608 on a closed basis, you're right on the resumption. 1690 is the 2017 high we close. Slope converges on the December 2016 high we close. That's all the way up into basically just shy of 118, 1790s. So the only problem we have with dollar yen, as is typically the case, is Momo, right? We just can't seem to catch momentum in either direction. And this is the yearly range high. Let me move this over. Here's your yearly open. This is the objective yearly range highs. So once again, you have an objective monthly opening range taking shape right ahead of the key resistance at the yearly highs. Here's what it looks like at the daily chart. It's a pretty big reversal candle yesterday, but wasn't any type of technical formation that would necessarily suggest red flag, but major resistance. The 618 of the yearly range sits just above the objective monthly open, right? 115.14 is the monthly open, 115.25 is the 618 of the yearly range. So it's all about the crunch. Looking for a breakout of this zone for guidance. Here's what the intraday chart looks like. Again, the idea was riding the slope, former support as resistance into resistance, then look for near-term pullback. My ideal scenario is to look for a pullback into this slope, maybe a 618 of the advance, and then look for resumption, bullish invalidation, 1414, that's the February range low. But since the start of the week, that drop faltered real quick, and we're just kind of ranging here. So pretty clear on this one. Look for a break of the weekly opening range. You're likely to get some volatility. I think this is going to be mostly determined by dollar price action. So you're going to want to look for those retail sales figures tomorrow, followed by the FOMC minutes. So hopefully we get a break here. But one thing you'll want to watch closely is the relation that you're seeing also with yields. Here's what the 10-year yield looks like. Not so much the intraday, but the daily, right? This is big. We talked about 91 basically into 94 as being your major resistance. We missed it here. There was the pump, there's the break. It's been support basically for the last 5 days. All right. On the upside though, you have basic slope resistance as well. It's exactly what capped the advance on February 11th, which, by the way, we posted a massive outside day reversal. So all things held constant until we clear that candle from the February 11th span, that range, you're basically looking at this as a near-term opening range break. So something to keep in mind there. Any questions on dollar yen? All right, now let's talk about some of the juicy stuff that's happening right now. And that's the SPX. All right, so this is just so impressive because we don't really get price action that's like this insanely clear in the SPX so often. Nonetheless, here we are. The story can be told, the whole story can be told from the weekly charts, is why I like starting off with this one, because this dominant original slope has really been the whole play that we've had since the start of the year. Outside weekly reversal called the exhaustion. We literally talked about that. Near-term support at 45.34 broke. We're unable to close above it on a weekly close basis. So basic support and resistance had you looking lower into the start of this week while below 45.30s. Mind you that the slope is there as well. So a break of that slope, check of that as resistance, has you again looking for a move lower while below 45.30s. The drop we got last week continued this week with the decline stopping at a major pivot. The 52-week moving average, objective stuff, 43.74 and 43.64, the 618 of that bounce. That's all that matters right now. So we came into the week looking for a drive into that level. We got it. That's the weekly low is right there. And here's the recovery. Where do we go from here? Well, here's the daily chart. The broader downtrend that we're in, again, objective high, low, high. Rebounded off of downtrend support, failed at downtrend resistance. Here's the 618 and the pop higher. Now, forget the 38 at this point. Let me clean this up. This pop higher needs to fail ahead of the objective monthly open at 4,500 right here. If it fails ahead of this zone, you're looking for a new low. Again, I'm never the popular guy when I'm starting to be bearish on equities because being bearish equities it's been a fool's errand for the last couple of years. But this is too technically clean to ignore. So I have a clear line in the sand, and that line in the sand is right here. Okay, you've got the lows that you marked back here in December. You got some pivot highs that you made back here in September before the inevitable breakout in October. It's this month's objective monthly open and downtrend resistance. So could we get a little bit more of a pop higher? Sure, yeah, maybe a little even move towards, 4,500, but you're still at risk. You're still at risk. So here's what it looks like on the intraday chart. Get this in the 4 hour. And here's our last update on the SPX. Okay, this was right into the weekly open. Or when was this? On the 13th, yeah, on my birthday. Here's the turn of the uptrend. Here's the break lower. The focus was, look, if we broke that slope, look for the 618 support. That's 43.63, 43.64. Look for a reaction there. Well, what happened? We broke, we drove right into that zone, and then we reversed, rebounded. We're back into that 38.2. Former swing lows. Looking for a pivot right here into the 930 open. If it pushes higher, great. 4,500 needs to be the max. If you fail or if you find resistance into this zone, you're basically looking for, again, a new low, 45, 45, 42, 45, and 4,200. If we plow through 45 and we close above, right? This was Friday's high. If we close above that, you're done. You're basically looking for the resumptive trade. At that point, you would think, okay, the correction is over. We've washed out all those hands, looking for a pivot back up into 46.70s, 46.90s. All right. So levels are absolutely critically clear here. I don't want you to focus on this too much, this 38.2 here, but just watch this slope. All right. Any questions on the SPX? Okay. And by the way, you know, you start to think, or you start to look for, if this does break a slope to give the advanced guidance. I'm just going to show you what I was looking at earlier. This is just something I'm contemplating. You know, could be this one, could be this one, but either way, like, this zone is still the major breakout you need for any type of resumptive move. Personally, I'm still looking for the move on a break lower. Okay, so I don't think that the pain is necessarily done yet. So we'll see. We'll see. Any questions on SPX? All right, that's number 8. Number 9. Okay, 2 last things real quick to wrap things up. I have a quick note on oil. I showed you this yesterday. I'm going to show it to you again, and the technicals don't lie. I've been continuing to hammer the drum since the start of the week that this could be a larger technical event for oil just from a correctionary standpoint. Remember, this is going on a year now in the weekly charts with a series of higher highs and a series of lower highs. We're into uptrend resistance. This 618, again, I don't put too much merit on. I've told you the story about this. This takes you into the zero measurement, which again, on the futures chart, we went negative 40 back in 2020. So I don't want to put too much stock necessarily in that 618, but uptrend resistance, it's pretty damn clean. Pretty damn clean. So it's a good choke point if we are going to get some sort of exhaustive move. Anything beyond the highs. No, Siri, I'm not talking to you. Anything beyond the highs, you're looking at 100 from the weekly standpoint. From the weekly standpoint, you take a look at this in the daily. It's not quite as like deadly looking. Oh, that's CL1. Here's U.S. oil, right? But certainly looks like, again, the quintessential exhaustion trade. Near-term support, key support, where you'd look to find maybe a major inflection is going to be right into the monthly open. That's 88.12, but really right around here, that January 2010 high. Forget that. This is the objective monthly opening range lows and slope. So I don't think this is necessarily going to turn over crazy just yet. Obviously, we want to highlight the divergence we saw into the high, highlighting the threat of exhaustion. But a move back to the monthly open, that wouldn't be too crazy. Wouldn't be too crazy. Nothing too compelling yet on the intraday charts, but 4 hours highlighting also divergence in this high. Looks like a break of yesterday's low here. So if we see some resumptive moves, look for the drawdown. You know, have to do some work on this if you're looking for an actual scalp setup. I don't have anything to define the downslope, but one initial thing I'd be looking at is something like this. Highlights 87.14 as support. All right. Any questions on oil? Anyone's brave enough to try to take that on the short side, but if you do, stay light. The other one is Bitcoin, another very precarious one, but encouraging, at least from my standpoint. We came into last week on this whole pullback saying we want support ahead of this zone. Okay, a basic 38.2. Move this to the downside. A basic 38.2 is like 40,900. Even better was the 100 off the low, a 236 off of last year's high. Nice pivot zone was right here at 41,400, 41,500. It's exactly where we bottomed. We're not out of the woods yet. The major breakout, whatever you want to call it, the reversal, the signal of a larger continuation of the broader uptrend would have to be a buckle above 46,700. So we're not out of the woods yet. The yearly open comes in at 46,200. That's sort of the zone we need to clear. I think, to mark a larger, or to signal that a more important low is registered here. Remember, that was a 52% drop off the high. We did some research last month about the average decline from a percent standpoint. This was 55% back here in 2021. Again, this late 2021 decline, also another 50% drop. So if we're going to continue, that's sort of the breakout I think you need to see for the resumptive pattern. Yep, Ethereum is in the same boat. I have that one. So here's what I have on Ethereum on the near term, or excuse me, on the daily. It's the same level. It's going to be at 38.2 on this one though. So like 31.94, basically 32. I'd want to see that breakout to kind of mark resumption. The one thing that a lot of people have been commenting, again, I don't look at commentary, but people send me stuff, is the possibility for a head and shoulders. It's pretty clean. It's pretty clean. That would put the neckline here though. Oh, stop traffic. It's the same zone we're looking at. So whatever technical formation you see, guys, sometimes you don't hear someone noting head and shoulders or noting, a triangle breakout. That's all good and dandy, but when it converges on levels that we're looking at, it's great. A 46,700 breakout would be a breakout either way. Add fuel to the fire, that's the neckline. So the inverse head and shoulders could be in play. Wouldn't matter till we break that zone anyway. So it's all looking at the same thing from different angles. Okay, that's everything on my chart. Quick reminder, yesterday I talked about Tesla holding support. We're still there, so watch 840, 850 for those who are interested on that side. But that's all I got from this end of things, guys. Watch those retail sales figures tomorrow. More importantly, the core inflation figures out of Canada and the UK may be the trigger, the catalyst we need to get those trades getting a breakout of those major ranges we were talking about. Otherwise, it's going to be all about retail sales in the US and FOMC minutes. Again, I typically don't look at FOMC minutes as sort of a playable event, but who knows, this time around might be a little bit different as we continue to see that leaning towards a much more hawkish stance and a much more aggressive stance, with Bullard saying 50 basis points here, or he sees 100 by May. So it's interesting to see how this pans out. We'll look to see if there's any updates in that. Till then, stay poised, okay? Keep some powder dry. We have a lot of those weekly opening ranges in play, and we'll look to see if we can get a breakout of some of those plays in the next few days. Best of luck trading, guys, and I will see you on Thursday morning. Cheers.